This is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, April 30th, 2024. It is 4:01 p.m. as I'm starting the video, so the market has just closed. And I figured I'd just record one kind of in real time. I hadn't posted much today. I told you I was going to take a little time off late yesterday and today, which I did. Back at my desk, and we'll just look at, we'll start out with who's reporting tonight. As I mentioned, we've got a lot on the earnings calendar. We've got, well, I zoomed out too far, or zoomed in too far there. You've got Amazon, big one tonight, AMD, and SMCI. All reporting tonight. SMCI is not going to move the needle on the market, but it is an active trade idea I've thrown out a while ago, and it's kind of tied into to a good, a better, or greater or lesser extent to NVIDIA, and of course AMD is still a big tech. So let's take a look at those charts. I've got my CNBC screen up in one monitor here. I dragged it over. Looks like Amazon is out right now. And so we'll start there. Amazon's a big one, so we'll get back to AMD here. AMZN. So here we go. We can put it on a 1 minute chart. And I always talk about this. This is a 1 minute chart. So here's after hours in white. We say, the initial reaction, there's three parts to an earnings report. The initial reaction when earnings are released, that's the initial, the basic, the information's disseminated. Algos parse that data faster than humans can. Humans will act on it quickly as well. And so you go up, down, up, down. Then you get the conference call, more color on really what the earnings were all about, how the makeup was. And then if most companies, not all, but most give guidance, and then that can also move the needle. And then part three, so earnings release is one, conference call is two, part three is when the market opens really in the next day. As you can see, a lot of after hours gains. And even, it's not just after hours. I always say, just like that last FOMC meeting, of course, we have one tomorrow. It's usually about a day or so before the market figures out which way it wants to go. So the last FOMC announced a rate decision, market ripped up. That final 2 hours of trading that day went up a little bit, quite a bit the next day, and then that was the top, and that's where we're at now. So we'll get back to Amazon. I don't want to be redundant. I've already covered these charts. We're looking. This is showing the after hours trade. So this is that spike down we had immediately in after hours. It's amazing how often I see this too. The after hours spikes this big. I think you can see this white candle. It goes all the way from right here down to right here, which is about 165, and then you can see on my daily chart that's my important support level, 165.74. I see that all the time. I don't know, it's almost I know it's not them looking at my charts, but I guess I'm looking at the right resistance and support levels, and orders get filled down to there, and boom, that got tagged. And you can remember with after hours trades, you can set a limit order, and sometimes, I guess once in a blue moon, you get what I call an errant fill, a little spike down to that level, way away from where prices are and were trading. And so let's say you were short, coming in today, you could have had a sell limit order there to be filled in the after hour session. And maybe that would have been hit. I don't know. Anyway, that's Amazon. We also have, I'll get to that in a second. I was very clear, on the ones, that had a clearly bearish chart, which direction I think they'll ultimately go. Let's talk about that real quick, because Amazon's just out. It's really flattish for the day. If you look at where it was, this is in after hours. We're up 1%. We're basically, here's a 5 minute chart. There's where we traded all day today here, from here over to here, open there, trade a little higher, traded in this range right here, this high, and that's exactly where we are. So it's a go nowhere stock right now. And the one so far I've called down, let's see, we had the Caterpillar, and that one was clearly bearish, went down, hit that price target right on earnings. Had you taken the play, could have covered it at that 330. The 333.42 target, it bounced, went down. Meta, same thing, clearly bearish posture heading into earnings, got snot knocked out of it at earnings, and is clearly below, well below. So that one we can, also declare mission accomplished. on calling it down. The other two that so far, well, that's what I wanted to talk about. Didn't remember, as I say, it's not the initial reactions. What I'm calling what the direction will be coming out of earnings, and that means the direction, the next trend over the coming weeks plus. And so far with Microsoft, it was interesting because you had that pre-earnings jitter sell-off right there. So take it with a grain of salt. Post-earnings pop. And then pop has been 100% faded and then some. I've got the after hours trades turned on, but I don't think this one's done much. You can see this is what it did today. So, look, here's the thing. I'm not going to declare that one a correct call yet because we're right back down. We are below where we reported. That's the day we closed right there. That was the report. So we are below there. And again, it's more so the longer term call. If we hit the 200 days, I'm correct. And that's where in my targets, 200-day moving averages and 364. So far, I'm at least not wrong on that one. The other one was Alphabet. And right now, as of now, I'm wrong. But the time, it's still, we're just a couple days out of earnings. And they've done nothing but consistently sell this stock since the day they reported. You can see here. There's the earnings pop. So far, what is that? I'm just eyeballing it. Probably a 50% fade. You take Fibonacci's, put it up to the high. Nope, 61.8. They faded 2/3 so far, almost 2/3 of the post-earnings pop. And again, only time will tell. And, again, I've made it clear. I'm not trading each and every one of these. So I'm calling them more so to mesh with my market analysis. The longer-term bearish call on the Nasdaq 100 in the market as a whole. So let me turn that off. So that's, and then the other ones that we have coming up, SMCI, it's a given, where I think that one's going based on my, the current call for a move down to 355.60. That's sole price target. And then AMD now. I don't have an opinion, so I'm not going to make a call. I can tell you that we pretty much come down to the 200-day moving averages. I did highlight it back here, along with a lot of other semis that put in this one, there's a trio up here, these symbols, these little acronyms or whatever I have here. DH, divergent high, you know me, and my divergent highs and lows make a case for a trend reversal. Bearish engulfing candle, that was right here on the March 8th, right there. That candle, the body of that candle, the red one, fat part engulfed the previous two candles. That is a topping stick. That's not for a short-term trade. That's a trend reversal stick. Say what you want about it. It's 100% already effective because the stock has dropped 36% down to the 200-day exponential moving average. And even if that was it and it goes to the moon from here, that's certainly a trend change, a heck of a short trade if you took it. It did just break down below the trend line, and it did just bounce off close to the 200s, but I suspect it's going to have more downside. Again, I'm not making a prediction on this one, just more of a guess. And based on the current trend, where the market's going, where the semis are going, birds of a feather flock together. So whether they pop post earnings or not, heck, if you look at it this way, you might even have a case to be made for a head and shoulders topping pattern. It was a little sloppy, a little small on the right shoulder, but that would be the neckline there. And maybe even a little bear flagging action. Either way, we'll see where that one goes. I don't have strong convictions, but I do still maintain it's coming down ultimately to this trend line here, this uptrend line, and you have the 200-day simple just below the exponential, just bounced. So there's the three that are reporting tonight. Remember, we've got Apple coming up, I think, on Thursday, Fed meeting tomorrow, a lot of economic events. Here's a good example. Let me just backtrack here okay, so if you recall yesterday, normally in these economic reports, I'll just highlight the ones in red, which are the biggest potential market movers. That's how Econoday uses the star symbol. Green, red star is like the big ones. Green is sometimes maybe. And I said this week, pay attention. Right now, the market is hypersensitive to anything that will make or break the case for rate hikes. And so it was this green one today that did the trick. Employment cost index, as the name implies, the cost for labor. Consensus was 0.8 to 1%. Came in hot, 1.2. Year over year, that's a 4.2%. And that was cited this morning as the cause. If you go back in the morning, let's look at my beloved Qs. 1 minute chart. I got to turn it on this way. Edit chart properties. Pre-post. I need to show you both 2 sessions. There it was. So that was, didn't look like a lot, but it was. It was right here, 8:30, boom. And that really set the trend. That started the initial, 0.5% drop. And the Qs, nothing but down since then today. So let me turn that back off. Okay, so let's go to see how they're doing now. There's Amazon. There's just a great example. Don't read too much into that initial pop. So far, most of that initial pop's been faded. But yeah, we're back to the flat line. This has gone nowhere so far. So only time will tell. We'll see. I'll check back maybe at the end of the video. SMCI. Let's see what they're doing. Same thing. Some folks overreact on the initial pop. And so if they bought it there at 945, they immediately lost 15%. This is a volatile little stock. It's going to go up and down, but again, and then the other one was AMD, kind of really going nowhere. I'm not sure if they're out yet. Let's see. Just reported. Nope. Looks like AMD is not out yet. So Starbucks is out. Let's take a look at Starbucks. Oh, oof. Starbucks was rejected at this downtrend. Oh, look at that. Beautiful. How did I miss that one? I wasn't watching it. It wasn't on my radar, but this thing's been in a downtrend. You had a divergent high here, broke that trend line. Here's one of many stocks, so many that are in bear markets and have been since what I consider the bear market start date back in the end of, late 2021, early 2022, peak, divergent high. Had, one heck of a healthy bear market rally after that initial leg down, put in divergent high, ended there, and divergent high again. And this is a signature of a bear market. These divergent highs just, and sometimes you get the divergent lows and they play out for a rally. But, if and when this one takes this out, we'll be able to say with a higher degree of confidence that this is the start of a new bear market, a much bigger, longer bear market. You really need to take that low out there right now. You can make whatever case you want. Maybe that was the end of the bear market. We go up to new highs. Either way, this is the reality right now, down 8%. But a beautiful, look at that. These are levels. I haven't touched this line since I created it back on, oh no, I'm wrong. I created it in 2020, updated in March of 2024. So I must have looked at that not too long ago. It was a really nice support level. Was taken out here, back tested perfectly in conjunction with that downtrend line, and boom, that sent us right down to my next target. Where the stock, but you buy it today, it'll probably close around 82. That's good support. I doubt it's just going to go right through there and keep going, but I wouldn't touch it now. It's just, this one's already gone. Oh, I'm going to also just update in this video the pot stocks at the end for you, because I got the alerts today, like everyone did. Somebody sent me a Twitter thing or something when it first broke the news, and then it came out in the journal later. They're going to try to classify cannabis or marijuana as move it down, whatever the status it was on now. It's it's a less dangerous drug, setting the way for potential legalization in the U.S. And we'll look at the pot stocks. There's some of them moving today, obviously. So that's it. I mean, look, QQQ, same story. Let me go to my main board here. Just a breakdown right there. This is technical analysis 101, T1. That was our, we had sell signals earlier on back here, the last post-Fed sell signal. More recently, we had a major sell signal, what I've been waiting for a long time, in a break of 433, the bottom of this multi-month trading range. Hit T2, bounced as expected, made it all the way back to 433, which was a golden short, because that is, it was major. The better the support is once broken, the stronger the resistance is. And so far rejected there. And these are still my targets, and maximum target there. Like I said, if we punch down through there, because I think, if I'm correct, we'll be carrying pretty fast. So a lot of velocity coming down heading into the 200 days, and T3 and T4, we might slice through there briefly and then, park back up there. We'll see. But like I said, right now, T4 is kind of still my sweet spot, if you will, for this swing trade. And let's just rifle through the other things, and I'll get to the pot stocks for you. Microsoft, I already covered, but there it is, 100% of the post earnings. Remember, they blew it out, but look, that's just what I said. It's not about, I've seen this time and time again. It's not about what a company reports, it's how the market reacts to it. When a company or a stock is saturated and everybody's bullish, that's how sentiment surveys work. When everybody's bullish, and I'm speaking metaphorically, not literally, but the majority, and you get to extremes, everybody owns as much Microsoft, Nvidia as they have money to buy or willing to allocate to it. So there's no one else left to buy. And that's why stocks often top on rosy and good earnings and news, because it's all been priced in. And then at that point, you have nothing but people taking profits. Apple still coming off that divergent low there, still above that 1661, but so far a pretty hard fade today of the recent rally, and it's just kind of dead money here. And again, that'll get dragged down with the rest of the lot, but it still has one of the more constructive charts. Nvidia still flirting with this downtrend line and just a hair above the 840 level. Remember, there was 840 was the bottom of the trading range. Got back in there, but then pretty much parked for the last 2 days, right around in close proximity to the downtrend line. And again today, tried to get away from it. You can see you have 3 little highs here. If you go to a little 5-minute chart, you'll see this small little trading range. And so again, if we get rejected off the trading line and another move back down through 840, should do the trick, take us to my next targets there. Alphabet already covered so far, a pretty hearty fade of the post earnings pop. We're almost back down to the previous high, so that was really the breakout right there and gapped above it. Big level. If it fails that, I mean, there's the whole bottom of the gap is down there, but that'll be, pretty much lights out. And remember, the way that gaps work, almost all traders bought here that next day, and the stops got blown out. That's what happens. You get order imbalances. Anyone short Alphabet probably had a stop anywhere from here to here, but certainly above 159.60 because it was two, previous highs, a couple reaction highs there, all-time highs. And so that's what happens. That's why I'm not a big fan of trading stocks. Or if I do pull stop orders, pull them off, cancel them if you're going to play it into earnings, because you get caught on the wrong side of what we call order imbalances. When the market opens at 9:30 a.m., every stop loss order gets hit. So stop loss orders here get filled. They convert instantly to a market order once the stop price is triggered. So if you had a stop loss order at 160 and you were short, then you got in line with everybody else and they all instantly converted, and you had just an overwhelming amount of buy orders, buy to cover and natural buy orders, and that's what that was. So you don't chase those kind of pops, and if you got the gumption to it and you didn't take too big a position size and you went home short, like I said, you pull your stop, and if it stabilizes and keeps going up after that, then you just put it back in and maybe you get back a little more. But so far you were able to, if you held tight, again, I don't see why, would have been just a pure gamble to go home short in front of earnings on really any of these individually. That's why the indexes or QQQ is a little safer play. You're diversified a little bit there. 7% drop. Amazon still kind of going nowhere so far. This is again showing you the after hour, the range here and where we're currently at. We're at the bottom of that red, the body of that candle right there. So actually down now on the day. Meta I already covered. Tesla yesterday I covered, told you was coming up to that resistance there, and said, look, if you happen to be in it, because I mentioned as one of the better looking ones recently, that's time to get out. It was off the recent lows, 40% run right into major resistance at 198.16, and boom, you hit it yesterday right after I covered it. Give you a very objective time to take profits, or at the very least tighten up your stops, and nothing huge, but since then it's already given back over 8%. Okay, pot stocks. MJ is one of the cannabis ETFs you can use. And so this one did put in a divergent low, and I can have to update this chart a little bit. Just looked at them earlier. There's a divergent low right there. It had a rip. I might even have highlighted it back then, I think, as a trade idea. I can't remember. I do recall highlighting him sometime back last year. And that's big resistance. See, it was key support here. Then support, once broken, becomes resistance. Bam, bam, rejected. Bam, hit and rejected. Bam, rejected. Just took it out today, not by a large margin. And I would just tell you, if it can take it out, there's going to be one little hiccup along the way, meaning minor resistance, probably minor reaction there, about 542. But I think it could run all the way up here to about 657 if these guys have some traction. Fundamentally, I'm not as bullish as this. Technically, it looks good, and doesn't matter. Technicals rule the roost. Actually, there's really our divergent low right there. Fundamentally, and I've shared this in the past, you used to trade these mostly long when they first started trading a few years back. And, when we kind of peaked out, had that blow off top there, I said one of the things about legalizing cannabis, be it Canada, who was first, and then U.S., well, ultimately, I'm sure we'll get there, and other countries have done it. They'll do it because they're going to tax the bejesus out of it. That's the thing. The U.S. will tax the snot out of cannabis sales. And unlike beer, I remember once years back, I was in my 20s, my wife bought me one of those home beer brewing kits. I never opened the bag. It was just it's just too much. And I knew that even if I brewed it, it'd probably taste like crap. I like to go to the store and buy craft beers that are just to perfection. So my point is, but cannabis is easy. Anybody can go to Amazon and get a grow light and grow it in your house, put it in your backyard. Again, if it's coming legal, or those that don't care to grow it and you just get it from a friend or a dealer. So I think that's what the trend is going to be, because it's so easy to produce. It's a very fast growing plant. Again, I don't have experience growing, but I can just tell you, it's not like brewing your own beer or vodka. It's going to be, or distilling your own vodka. That's my longer term view on it. So I don't think that the huge profits that they see are going to be there. There'll certainly be some people that want to buy it from, places, and make sure it's not laced with fentanyl, all that crap. But anyway, I'm just kind of getting off on that's longer term. So near term, sure, those are your potential targets. This point, you can, stops could be below reaction lows. Or even if it can hold above 150, if you took it, you want to see it hold above 159, at least below 402. That's my next, or $4, my next support. Individual names, you always get more bang for your buck on the individual ones. This is that, the bane of me with this charting program. Every time stock splits or reverse splits, my lines get all, they don't make the adjustment on this charting program. But I just gave you a trend line there. You can see ACB, which is one of my favorites. This was the first one we had in this official trade idea. It was too famous first. The first penny stock, this was before it was ACBFF back then. It was an over-the-counter bulletin board stock. And we swung it up for like several 100%. It was our first cannabis trade officially on the site. And we're talking 2011 or something. I don't know, a long time ago. And now it's ACB. But either way, it just took out that trend line. It's coming off a big divergent low. So, plenty of room to run. You'll get more juice on these individual names. If I get enough comments, you guys want me to mark up charts, give targets, there's an initial little close by target, 1187. I'll be glad to do so. I just wanted to follow up because I'm sure I'm going to get some questions on the pot stocks with the news today. That was MJ. I've got a bunch in here. Cron, CRON, Kronos Group. Same thing. A lot of them bottomed recently with divergent lows and have been walking their way up. And they also, so that's one thing. And they also have, this one had a very good level here. I just added it for you. That was support, support, support. Very good support. Support once broken becomes resistance, resistance, false breakout, but followed by another one. And usually when you get a false breakout and you come back up, that should do the trick. But to play it safe, you're right around that previous reaction high. So the bottom line is this could just be a one-day wonder on the news. But if it can follow through, which I suspect it probably will, next stop 356. Then these are old levels, but I think they hold true. Maybe max target right now, 512. If you're just looking for a tuck it away, longer-term swing target, 512, that would give you about 76% from where we're at right now. All right, so I'm not going to go over each and every one. The main thing I wanted to get an update out to you because I took a little time off, get an update on the market. There's OGO right at trendline support. This one's actually, didn't really rip as hard as some of the others today, so more meat on the bone, potentially. And I always say with these guys, CGC, Canopy Growth, that one's a nice looking chart. Look at that breakout, back test of the primary downtrend line off a big divergent low. Let me mark it up for you. That was a big divergent low and exploded up 75% today, but still has, again, if there's follow through, which I suspect there'll be, $21, I'd give you another 36% tomorrow, and then maybe all the way up here to about 44, and that's about 190%, again, from where we closed today, not where they're going. So, and you have to beta adjust these. They're very volatile. Anything that you have the potential to make 140% in, you have a potential to lose 140%. So risk and reward go hand in hand, folks. If you're going to nibble on these, what I like to do personally, if you're not going to use an ETF, my preference is to take a shotgun approach to find the best looking names, pick at least 5, 6, 7 of them, spread it around and sprinkle small amounts. You don't need to put a lot of money in a stock if you're targeting to make 40 or 140%. And then, that allows you to use a little bit wider stops, because if you don't use a wide stop in a stock that can go up 75% a day, if you're running a little 5, 8% trailing stop, they're going to take it from you. They're going to take your shares long before your targets hit, just in the back and forth volatility. All right, let's go back to the other ones, and I'll wrap up here. So what do we have tonight? Amazon, what is it doing here? Going nowhere so far. Let's see. We'll have to follow up tomorrow. SMCI, also really not doing much. Wow, yeah, about where it was. AMD, so kind of a muted thing. Remember, the market was down. AMD actually down a little more today. And that's about it. Somebody said thanks for that GDX update yesterday. Give you an update there. And remember, it's more about where gold, you just have to know where gold's going. And gold was the same update I gave the day before. So I gave, it was yesterday, Monday, on Friday, I gave an update too. Gold had broken down after putting in a divergent high here and breaking down below this, a breakdown and back test below that wedge, that trend line, went down to my next secondary trend line, danced on that trend line for a while, gapped down below it, and then took out the third trend line here, back tested, and still moving lower. Got some potential but unconfirmed divergence on the PPO, but no divergence here on the RSI. Oh, Intel, looking at long-term support. You can see it here. Remember, we traded this stock long back here and here off that divergent low. We had an official trade, hit T2. T2 was right here. There was this trading range right there. I'm circling. I should box tool it in right there. And we swung it up to the top of that range. It overshot it by a bit. It was a failed breakout, came back in the range. If I'm not mistaken, we might have shorted it back down after that. But you can also see I had a line right here. That was actually, that was T2. It was this line right here. I'm going to color it up. It was one of these two. I think it was the lower line, and that's exactly where we're at right now. It was that line because we had, it was more of a support. Maybe it was a target zone. We had one pop through there, but a lot of reactions right here on this level, which the line I'm carrying through, and that's 30.48. And the last time it was this oversold right here on the RSI was right here. And it did this, and it wasn't much, but it was a quick, trying to hold this here. It was a quick 26 or so %. Other than that, the chart looks like death. It's in a free fall. It is 100% catch a knife falling trade. It's just for those that think that, well, we already kind of went over today's earnings, but, if you're bullish on, you think we're going to come out of this week ahead, and the Fed's going to be a pivot to the upside, and QQQ is going to, get back into the range, retake 433, and go above there, and or Apple's going to blow the cover off the ball and get the market rallying, then this one should follow and has more upside potential. There's a big old gap to be backfilled. I mean, at the very least, maybe just swing it up, backfill this gap right here. That in itself alone would be a 12% or so bounce, and it could still resume the downtrend. But so I'm not super crazy about it. I just wanted to point out, and you can see it here, and the weekly shows it well. There's that trading range. There's my weekly chart right here, and so you can see this trading range there. Big strong positive divergence. Highlighted back here is one of the top picks, bullish stock. It went up, took out the downtrend lines, had a nice run, but boy, it gave up almost all that. But right back to where it started, after the breakout, that is. There's one little false start and then the real breakout. and that's where we're at right now. And we're coming also, look at that, we're coming right up back test. I had alternate trend lines here, and so that's it. Other than that, you know, it is oversold on the weekly as well, but that that often stops a pullback in a bull market, but not always in a bear market. Sometimes oversold just becomes more oversold. So just wanted to throw that one out to you. And that other long I threw out recently, it's not, you know, it's a long here at 200 MKTX. It's not going anywhere yet. They report, oh yeah, that's right, guys. I looked it up. They report next week, I think it is, around May 6th or 7th. You can get it on, you know, you go to the earnings calendar here. You just type in the symbol, and it'll give you the, oh, something happened there. Give it to me earlier, MKTX. Market access, Tuesday, May 7th, before the market opens. So you might, you know, you can take any position before earnings. It's a gamble, but you can always take a starter position if you have confidence in which way it's going to go. All right, let's just wrap it up here. 31-minute video, not too long. So we know what's going on now. I'm looking at the other screen. Yeah, Advanced Micro's down about 4% in after hours. Super Micro only down 1.3, Amazon up 2.5, Starbucks down 10. So those are your just reported earnings. I'm looking at the CNBC screen. All right, we'll pick it up tomorrow. We'll see where things go. But, you know, bigger picture, if you're keeping your eye on the ball or eye on the prize, you know, so far, this is just simply a breakdown. This is my 60-minute chart of QQQ. We broke below the purple trading range. Again, I don't know why I keep grabbing a circle tool. Broke below it there. Consolidated, a little bear flagging action. Couldn't get above it, rejected, hit. That's right when we hit T2, which was on the daily chart, which was T2 also right here on the 60. Bounced up right back to 433. It was a gift. I didn't think we'd make it too far because it was so obvious, but we did and rejected. But it's not over till it's over. Here's where we start, you know, whatever. You can look at any way you want. It's a win because there we covered and reversed, or, you know, I didn't, you know, recommended that for any active traders. And so really it's just a recycle in, and now we're back to where, you know, I started shorting it back in, averaging, scaling back in. And so let's see if we can hit T3. The next, although that was an objective short, the next sell signal and or objective add-on will be on a break below T2, because T2 was support. Support once broken becomes resistance, and that is, let me go to a daily chart. Daily. Yeah, on the daily I have it at about 413 or so, whatever the recent low was there. All right, guys, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.